Hey folks, Stiffer here, the rate update. Today is September 15th, 2021. What happened today? Well, not great news for mortgage rates, but I got some other good news that's showing a positive in homes for sale and the inflation numbers. So don't go away. We'll be right back. As you guys know, we follow the bond market here, especially the mortgage-backed securities market, but I want to just give you a little insight of what the bond market did today based on the import prices and how that affected the markets. And then when we come back, I'm going to show you what it actually did on our end. So don't go away. Watch it next.
Time for the bond report. See how treasuries are faring following the release of the industrial production data earlier this hour. We did get about 4/10, looking for 5/10. Empire was pretty good. Yields climbing back a bit, getting closer to 130. Over in the UK, inflation rising at its fastest pace in almost a decade. Consumer prices in August up 3.2 year on year. There's a look at the gilt. Dow's up 115. Don't go away.
All right, so that just gives you a little bit of insight. That's just one little thing that I monitor on a daily basis. If you sat at my desk, I probably get about 12 different newsletters. It starts about 6 o'clock in the morning, goes through about noon, and then I get mortgage updates and everything else just to keep you guys informed. There's a lot of data here, and I'm not trying to bore you, but if you're in real estate, if you're a mortgage broker, if you're a mortgage lender, if you're a realtor, you're a consumer, please watch this video and learn as much as you can about the markets. And especially if you're buying a house or looking to refinance or anything like that, be an informed buyer or be an informed homeowner. That's the whole gist of this channel. So we had some great news come in today, but it didn't play that well for the mortgage-backed securities market. So let's get into that so I can explain it to you. Mortgage demand for home buyers jumped to its highest level since April. Why? The new listings coming out. Okay, so I told you guys there's listings coming out in the tune of maybe up to 800,000 homes in the next 2 to 3 months. So this is a lot of stuff. I'm trying to show you that what my predictions, I wish I was Nostradamus or had a crystal ball when it comes to sports or lotto tickets, but I don't. But I know this business, guys. Okay, so the mortgage demand starting to spike because there's more houses on the market. Another thing, U.S. import prices fall for the first time in 10 months as inflationary pressures ease. Another area where I said it's going to be transitory. Now, no, it's not going to be transitory everywhere, but there's a lot of areas in the economy where it is. All right, so those are the two things I just want to explain to you guys why I follow things, and as they come true, if they come false, if I miss it, I'm the first one to eat crow. I'll let you know, hey guys, I completely botched that one. I messed up, but these two I basically nailed. All right, so that's that. So let's get on what happened with mortgages today. So to follow that, what we do is we watch the mortgage-backed securities market. It's a bond that trades on Wall Street that is the biggest component or the biggest factor or ingredient of the mortgage rates. Okay, so here's what's happening. Here's the quarterly chart. Let me just make it one little thing clear on this. When this number goes up, okay, it has an inverse relationship on mortgage rates. So this is what's happening to the price of the bond. As the price goes up, the rates are coming down. Okay, so this stream here was fantastic. Look how we gave it up within a week. We gave up about a month's worth of easing, okay? And then it corrected, and then we stabilized. And I love stabilization. I love how this is trading right in this range right here, okay? I've been saying I see us being at the 101.4 mark, okay? All I want you to take out of this, we're at 101.3, is if we go up to 101.4, means rates got a little bit better. Okay, so that's the trend right now. It's basically stable. How we monitor or how we factor this is what's going to affect this? News. What's going on in the economy? What's going on in the world? Everything else. So how do we watch that? Well, we watch the economic calendar. This is a specific economic calendar based on real estate. What in the economic calendar happening during the week is most likely going to play a role in what happens with mortgage rates. Okay, today we saw the import prices. We got the good news there that those are down. That means it's going to start drawing back some of our inflationary numbers because we buy a lot of imports. We buy too much imports. So if the import prices are coming down, that means inflation is starting to lapse. Now, tomorrow, we got some big news. The biggest thing we're watching here, just to give you guys newbies what's going on, why mortgage rates, let me turn this up a little bit, why mortgage rates are so low right now. One of the biggest factors is the Federal Reserve has been coming in and buying mortgage-backed securities, okay, driving up the price. As you saw in the chart I have, as the prices go up, mortgage rates come down. So their point there was they were buying mortgage-backed securities to stabilize the market, to make sure there was enough buyers in that market to keep rates stable. I don't really think they wanted historic lows, which is what we got, but they didn't want rates to spike, and then that would be a double whammy to the economy. So they might have overdid it a little bit. I'm not going to say, only time is going to tell on that. But what they monitor is inflation and the jobs numbers. Okay, they want full employment, meaning they want right now, they're looking to, if there's 1 million people getting jobs each month for at least probably 2-3 consecutive months, the Federal Reserve is probably going to step in and start tapering, meaning they're going to stop buying as much as they're buying in mortgage-backed securities. They're buying in the tune of $40 billion and more a month in mortgage-backed securities. The tapering means they're going to start drawing back. They might go to 35 for a month, then 30 for a month, then 25 for a month. Over a time, it'll basically come back to where they normally have been. So they might buy some here and there just to stabilize the market. They might not even buy. So we're going to look at a gradual increase in rates probably over the next 3 to 4 or 5 months, after we see probably 2 or 3 months of the job growth. And that's the number one thing that the Federal Reserve is watching for right now. They actually came out and said that. They don't care what's happening with inflation right now, but they're most worried about the employment numbers. Okay, so that's that part of it. So the next thing is what happened during the day. So let's check on the daily report. And we had the market opened. Well, I think we opened right around in here, right around 103, 101.3. We were up a little bit. And then as you saw here, we spiked down. But the weird thing here is when there's a green candlestick, that means there's more buyers in the market than sellers. So it's usually uncommon to have this big of a spread in that number. So there might have been something happening there. There might have been a repricing or something in that effect. But let's just take it. It dropped and then it kind of stabilized. Okay, and here we ended the day right through here, stabilization for the last hour and a half of the market. And there was probably equal amounts of green candlesticks as red, but we ended the day on 2 green candlesticks, meaning there was more support at the end of the day, meaning more buyers going into the evening close. Why is that? Why is there probably stability and people just being hesitant right here? Well, the jobs numbers are going to come out, or the jobless numbers are going to come out tomorrow. And if you notice, the time frame on when these are coming out is basically before the market's open. So basically what's happening is traders are positioning themselves right now to where they foresee the market opening. Okay, it's because they can't go in and pre-market things. So if the bond market falls off the cliff, or the job numbers come in really aggressive, these bond traders and so forth can't react until the numbers are published. And then by that time, it's after the fact. So I hope you get that part. It's like buying a stock. All right. So that's what I got for today. What we're working on our end is realtors. You guys are reaching out to us. Thank you. We have a huge proposal coming out for you guys next week, and we're structuring this right now. So if you're anywhere in the country and you're wanting to partner up with us, and you're like, how can I jump on this bandwagon? Please let me know. Call us, email me, post down below. I'll try to get back with you. But if the best way to do it is shoot me an email. I'll get right back with you. I'm trying to set up Zoom appointments with realtors to say, hey, if we get people that are watching our channels, like you guys are doing, if we get YouTubers that are coming in looking for homes and we pre-approve them, we're going to send it out to you realtor YouTubers that are associated with our channel to make sure we're one big YouTube family and we can help each other grow. So to find out more about me and my team, what we have to do, we're working with a lot of clients right now that are coming out of forbearance. That's why you're seeing the housing numbers starting to increase, more and more houses going on the market, because too many people put their heads in the sand and they don't know what to do. Once the forbearance is up, they might get a bill saying, hey, you owe 20 grand. What are you going to do then? Well, call us. We'll give you all the options that you're going to have available to you guys for that. However, if you're now saying, okay, Dan, you said now's probably the time, or let's get prepared to get into the housing market because more houses are coming into the market, as you saw in the headlines that we had, get pre-approved. How do you do that? How do you find out more about me and my team? Well, pretty simple. Go to the rate update right here. So the rateupdate.com, you're going to go over here. There's 2 ways, actually 3 or 4 ways to get started. The way I'd ask you to do is please give us a call. We'd love talking to you. We're not here to hard sell you. You wouldn't go in and, find a stockbroker and spend $200,000 in stocks without, basically talking with them, meeting with them, and figuring out, do they really know what they're doing? So we ask you to call us, 844-775-LOAN. All right, that's the number. The next way is you can apply right online. And if you do this, you're going to get an answer from us probably within an hour. So what you'll do is fill out an application. It'll ask you to upload any documentation that's needed, and you'll do that. It'll get assigned to us. We'll go in, review your application, and give you a call to go over any of the questions that you have, and you should have questions. The next thing, what most people are doing is they're setting up meetings with us. They're saying, okay, I can't meet with you today. I can't call you today. Can't call you over the weekend. I'm gone, but Monday at noon would be a great time. I don't know if I'll remember. Well, click here, go to our scheduling, click Monday the 20th, and then pick any time that you want to talk to us. And then what will happen is we'll get in touch with you at that time, however you want us to get in touch with us. Most people are either calling or doing Zooms, and we love Zooms so we can actually put a face with a voice. So that's how you get a hold of us. That has everything to do about me and my team. We would love to help you guys. So if you're in the market for a mortgage, looking for a house, or just want to kick the tires, on what you can do if you're in a forbearance, please give us a call. That's what we're here for. So God bless, guys. Thanks so much for watching, and I'll see you tomorrow. Bye-bye.